Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market and how they're moving their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing quite strong monthly demand and support. In fact, what we can see is that from here, all these previous rejections to the upside were created, and at the moment the market has just started testing exactly the same area, from which there is definitely the possibility to see another rejection to the upside. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50%, 0.618 and 0.786 Fibonacci retracements all lining up exactly inside of this area, which we could in fact expect this market to test and then to reject to the upside. So at the moment, also here on the monthly time frame, everything seems very bullish. Now, dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, we can see that as the market is approaching that confluence of support that we have previously identified on the monthly time frame, because we had both horizontal support and the Fibonacci levels in the same area of price. So that is a confluence of support area. As we are approaching this area, the market is also creating a bullish pattern from a weekly standpoint. In fact, we can see that during the creation of this move to the downside, the market has just created this M pattern. And in general, as explained many times, after the creation of an M pattern, you would expect a rejection to the upside for a completion of the pattern at the neckline, which is the previous support turn resistance. So here on the weekly, what we could expect is a potential rejection to the upside for a completion of this M pattern at the neckline, which is this previous support turned resistance here. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, things get even more interesting, because as the market is approaching that confluence of support, and here on the daily time frame, the market definitely seems overextended to the downside and in need of a rejection to the upside, this increases the probabilities that we will see institutional longing inside of this confluence of support, which at that point could push this market higher. Now, I did speak about USDCAD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. Again, after the creation of this M pattern from here, I explained all the reasons for which we could expect the completion of the pattern. And again, that is exactly what the market did. Then we had the creation of this move to the downside. From here, I explained all the reasons for which we could expect this push to the upside. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. But before we continue with our analysis here from a technical perspective on the daily time frame, let's first go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the biggest players in the market are doing. Now, what we can see here by looking at the data on the CAD is that with the last reports, institutions have been moving back to the bearish side for the CAD. In fact, we went from having the top here at plus 6.3k net positions, with institutions having more longs than shorts. In fact, we had 36.2k longs compared to only 29.9k shorts, all the way down to now having a quite negative net positioning at minus 63.2k net positions, with the complete opposite situation. So way more shorts than longs from an institutional perspective on the CAD with 82.2k shorts compared to only 18.9k longs. Now keep in mind that all currencies on the spot are traded against the USD. So institutions shorting the CAD means that essentially they are longing USD-CAD. So as institutions are already longing USD-CAD, and as this market is approaching that confluence of support that we have previously identified on the monthly and creating that weekly M pattern, which is a bullish pattern, we could expect more institutional longing inside of this area, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So how I could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to me one of my valid entries, at that point I could be looking for a potential move higher for a rejection to the upside away from this confluence of support area. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll lower past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.